Hey everyone, this is Michael Bengiat. This is the Stock Picks weekend video for April 30th, 2022. What we're going to do is we're going to go over the current market environment and then the stocks on our ready and watch lists. We don't have any stocks in positions right now just because the market has been very, very poor. Well, before we start, please pause the video and take a look at our disclaimer here. And let's go ahead and get started. So, our stock environment indicator has been red. It's been red for a long time. And really the best strategy right now is just no trading and no exposure. Pretty much the market is just falling apart slowly but surely. Even some of the stalwarts that have been hanging in there, they're starting to throw in the towel. We're going to look at some of these charts in a bit. And so it's hitting everybody now. So, in the bear market eventually mauls everybody, or the bear eventually mauls everyone. So we hadn't had any exposure to the market for a little bit of time now. So really all this ugly action is not really affecting us. And all we can do right now is we continue to look at which stocks are holding up the best. They may be the true winners of the next leg bull market that emerges. As you probably already know, the NASDAQ is actually in a bear market. The S&P is getting close. And so that's all we can do. We're just out of the market at this point. You don't have to be trading all the time. The odds of making any money now are virtually nothing. And so, you might find one or two stocks that go up, but that's just few and far between. And the vast majority of stocks are going down, including many of the sort of the market darlings like Netflix and even Apple is heading lower. We've had a lot of bombs. Amazon's had a big earnings miss on Friday. So the best thing to do is just be out, and that's what we're doing. So what I want to do is, before we start looking at some charts, I want to go over a really great lesson in what not to do. So this is a chart of Cathie Wood's ARK Innovation ETF fund, and this fund has been one of the market darlings for the last couple of years, at least in 2020. When she had a huge explosion of growth. And she's been featured on covers of many, many magazines and articles and all sorts of things. She's become a fun star, which at this point, they should just take the star back from her, because this is a lesson of what not to do. Her performance year to date is now down almost 50%. In 1 year, more than 60%. And in 3 years, she's given back all of the gains, basically from the big 2020 run. And is just this month alone, she was down almost 29%. So how does she create such poor underperformance? So this is what happens. Sometimes when you have somebody that thinks that they, in an easy market, when you're easy to make money, you just think, oh, well, I'm fantastic. I can't lose money. I can only do right. And exactly, sometimes the market itself is just so good that you can't help but make money. I saw that with my mom. My mom was, in fact, trading stocks in the middle of 2020, and she was just like, well, this is easy. I thought, well, Mom's not usually like this. Luckily, I persuaded her to get out before the carnage happened, so she actually did okay, which is good, but that's the kind of market. So, but what going back to Cathie Wood, her thesis has been she's investing in disruptor stocks. Means the companies that are doing things that are disrupting the status quo. And a good example is Teladoc. Unfortunately, you can see here, Teladoc is trying to disrupt the whole healthcare services sector. And for a while there, it looks like they were doing pretty well, but they're losing money. They've been losing money consistently over the last 7 years. They had one brief in 2021. They went 4 cents they made, but then 2022 they're looking like they're losing $33.54. And so disruptors don't necessarily make any money, but they're in the middle of supposedly disrupting. So, but the market's saying something else besides what she's saying. She's saying that these stocks are the true winners in the market. That's why she's piling in all her investors' monies, who now are all going negative. The market's saying no. The stock was a $260 stock a year ago, and now it's a $33 stock. But worse, what she's doing, she keeps buying every dip. She bought all these dips down, not just in this stock, but in all the disruptors in her thing. Tesla's another one. Tesla's the only stock that's actually performed, decently for her. But this one, it was announced that she had bought even more shares right in front of the earnings announcement, where that went down 42%. So she's just breaking every rule to do with risk management and risk control. She has no risk control. So the lesson is, if you're going to have your money with anyone, including yourself, you have to have built into your system a strong measure of risk control. Many traders will look at stocks and say, they're all risky. All stocks are risky. I mean, no one would have thought that they would see Netflix down 60% or more, which I don't remember offhand what it is, but it's something like that. Or Amazon, or Apple, or Microsoft. They're all in bear markets. Apple's the only one I think is only down 14%. But Netflix, Google, Facebook, even after Facebook's 18% run on Thursday or Friday, I don't remember which day, it's still down 40%. So these are the big players that everyone thinks, they're the stocks that you can't lose. Well, you can lose. You can lose, in Netflix's case, you can lose more than half of your money. So the best traders always have that, as I said, built in the risk control. And many of them are like, 8% is the maximum I'll ever go down in a stock and I get out. If Kathy would have done that, she would have really good performance. And also, she's buying stocks in well-defined downtrends. I mean, this doesn't get more well-defined. It's hitting like moving averages, which are actually in declines. That's already a warning sign there. You don't. Why would you buy a stock in a decline? I mean, that's just bottom fishing. And look how many times it just, she'll buy here. Well, that's the bottom. Well, it was for a little bit, and then it made a new low, and then she'll buy it again, a new one. And when the stocks rise up to declining moving averages and can't get past them, that's a terrible sign. And you can see here, it got a little bit above, but it failed. Here it hit this green, I think it's the 40, this is a weekly chart. I think that's the 20-week, and declining. Here it got up to, again, these are shorting opportunities. If you know what to look for, that's where you're shorting a stock. When it comes up to a stock that's in a massive downtrend and can't even get past these moving averages. But she's just buying. She's been buying the whole way down. I mean, it's in all the stocks in her fund. So the lesson is, if you're individually manage your own funds, you have to have risk control. It's the first thing. All stocks are risky, and all stocks can go to zero in the right market environment. So you're always looking at the downside. You're watching the downside. Have you noticed in the service, we always have stops, and we, sometimes it gets kicked right out. It just, the market was bad, or something happened, or there was news that just came out, downgrade by some analyst that doesn't really know what he's talking about, but downgrades it anyways. And of course, if one does, they all do, because they work in a herd. So, but that's just it. We were down slightly on the year, but we were not anywhere down with the market's down. And we also been, we have less exposure to the market as it's been going down. And we don't just keep piling in over and over. So that's the lesson here. So one other thing I wanted to show you, which, we're maybe coming near a bottom in the market. It's getting pretty oversold. But when I see stuff like this is something I just saw on Friday, which makes you just wonder, there's still too much bullishness out there. It's hard to see, but there was a stock that I saw that was up 100% on Friday. I was like, okay, what's going on there? Of course, it's a under $10 stock, so low quality. And the news was that the company's executive chairman, look, this is a $5 stock, so that sort of highfalutin sounding title really doesn't mean all that much. And he had bought 23,000 shares at $3. So he had invested, call it $70,000 in buying this stock. Well, the stock went up 100% on that news. Just there's too much bullishness on these ridiculous kinds of moves that don't warrant anything. I mean, yes, you could say, okay, insider's buying his own stock, but for it to go up 100%, In fact, if you even it's even gone up more than that. It's actually gone up 100 maybe 130, 40%. I mean, it's just this is some of the dumb stuff that you see in the stock market. So we don't buy these stocks, and it's in the downtrend too. Look at the declining 200-day moving average. All the moving averages are in a decline. Even the 21-day, which is in the 10-day. Look at this. That's the 10-day. So there's no reason to buy any stock like this, and you never find us buying a stock like this. So that's our stock lessons here. So what we're going to do now is we're going to take a look at a whole bunch of stocks that were on our recent lists and some recent trades, and let's take a closer look at what's going on. So I'll be back in just 1 second. Okay, so let's take a look here. This is a stock, Extra Storage Space. It was just on our lists, both in our long-term outperformer and our regular growth list. And this was a stock that had been doing really, really well. It was hanging in there, but it's a great example of the market eventually will hit everybody. And you can see here we had a nice uptrend going into this. The market corrected, the stock corrected, nothing wrong with that. And then it sort of formed another base. It got tighter and tighter trading. We always talk about how we're looking for that. This was our line here, and we had a buy signal, and it broke out. Now, we didn't purchase it because we had a couple other stocks and we had enough exposure given the market environment. And this has been a fantastic winner. I don't have a long-term chart, but I actually bought this stock, I think it's $6 or something in 2009, somewhere around there, and sold it near 100. It was one of my better trades, but it was such a smooth trader for so many years. It never shook you out. It's a great long-term performer. So, but in this case, this is just what's been going on, and I'll show you a lot of stocks. It broke out and just failed. And you can see here, 1, 2, 3, 4, 5, 6 out of 7 days down, and really just collapsed on Friday, right to its 200-day moving average. Now, normally, we sometimes try to buy stocks at the moving averages, but in this kind of environment, it's really not a great idea. In fact, let's look at Costco. This was one, we put it on our buy list as a potential buy because it came down and got supported its 50-day. On Thursday, it actually broke below and had a nice bullish close. I can't really zoom in that much here, but it broke below, kicked out whatever stops were there, and then closed up. So it looked like, oh, great, it got support there. But this is why in a market correction, you don't try to buy really anything, especially things because it just didn't hold. Friday, we plunged straight through that and handing a loss to anyone who tried to do that. Let's look at another one, Broadcom. We also had this on our buy list. Another stock. You can even see here, I have a line here showing we had some tightening trading up here. It tightened up here. It broke out. I think I traded this myself, and it just failed. Let's take a look at, and also, so we got supported at the 200-day, and then we actually closed right below it. So it's all very poor action. We'll take a look at a whole bunch of other ones here. Here's one, Intrepid Potash, which was a big winner. Really, look how many down days in a row. I think it was 1, 2, 3, 4, 5, 6, 7, 8, 9 days in a row, breaking below its 50-day. This was a fertilizer stock. It really was the only time we really had any kind of, I think we might even had a buy signal here, which was actually a great buy. I don't think we took this trade, but you can see it had a nice tightened up trade here and broke out, really did a nice move there. But there's not been a lot of those. Here's another one, Ryan, especially, this was on our list. We had a line here. In fact, if I extend it out, let's go over here. Yeah, you can see here, the stock had a nice uptrend, went into a little bit of a correction, and it started tightening up, had a nice shakeout here below this 50-day, the red line, and then tightened up here, and then it broke out and immediately failed. So this has been going on over and over. And even if we kind of said, okay, let's maybe tighten it up here, we'll go over here at the tops of all these peaks. We had another breakout of a nice tight area and it failed. Let's look at Brown & Company. This is one that was really holding up very, very well for a long time. A little bit trickier chart because it was quite volatile. But you can see the previous uptrend was nice, nice and smooth, a nice run here. Typically, when you have this many days up, you are going to get some kind of a correction. Never even came down to its 50. And kept going. Then it got volatile, a lot of up and down, and then this one just took off. We had it on our list, but it wasn't. We had a little bit of a pause here, which is okay, but not an ideal setup because you really want it to really have a little bit more time down here. But it just took off, and of course it failed. Costco. This is one that we actually owned. You can see here the nice uptrend before the correction. Came back up the right side of this little cup base, formed a little handle and decreasing volume. You can see it right down here. That's what you love to see. So what's really meaning is that as the stock is approaching its old highs here, which is around 566, call it 560 or so, we're not getting the sellers are just not coming in. Every time they would get up over here, the sellers, especially when they got over here at 569, the sellers pushed it down. So we were right below that, and finally it broke out, made a new high, nice move. We had a first reaction, it didn't quite make a new high. So it failed here without making a new high. In a good market, the stock will kind of go up, come down. One of the best traders in the world, Mark Minervini, he calls this like a tennis ball action. A good stock. Let's come back down to over here. So the stock breaks out, makes a move, a little correction, just doesn't last long, bounces back to new highs. Comes up, little correction, bounces up. Comes down, a little bit more correction, probably because the market was coming in, but doesn't last all that long, and then new highs. So here, we didn't get that, and we broke down now below the buy zone in the first place, and not a good sign. Look at a few more. Here's one, had broken out, failed. Here's one that tried to break out. In fact, I still have my signal here, my alert. It never got back. I think I put it on after that. But you look at right here, if I draw a line, let's see if I draw the line here. Yeah, so you can see, oops, that's not the line. Come on. There. So if I draw a line over here, we came back up and we kept trying to break above this, and then we finally failed. Raytheon, another one, held up very well. It was a nice uptrend, broke out here, failed. AutoZone, this is another one, really 2 days down the road. You can see these stocks are really doing very nicely in a market correction where the Nasdaq's down now 24%. This stock was making new highs just until a week ago. So these are the winners, and this stock has a long history of doing very, very well. But this is what we're seeing over and over. I can just keep going. Here's one, broke out, failed. Now it's just living below the area. Here's Molina. We bought this breakout. We end up selling half of it, I think up here somewhere, maybe on this day. We sold the other half, and now we would be actually negative on the position. So what I want to do is show you one more thing. Let me pause for a second and bring up Okay, so what I want to do now is show you, this is some of the stocks I watch on my growth stock watch list. Now, none of these stocks I'm actually trading because, as you notice, they're all in downtrends. Here's Amazon. These are all daily charts, just not a good looking chart. Here's Atlassian, Team ticker, $483 stock down to $224. There's a 50% drop. GoodRx, 48 down to 13. This was that big rally. They're all failing again. The big institutions are selling into all this. Etsy, 307 down to 93. Coinbase, 368 down to 112. I mean, I can just go on. Look at these downtrends. This is the carnage that's going on under the surface. And of course, you can compare these to the stocks that we're looking at, which are in uptrends, going, not going from the upper left to the lower right, but from the lower left to the upper right. These are all market darlings. Fastly, here's another one, Asana. Here's Fiserv, Fortinet. Now this one's actually hanging in there pretty well, but you can even see it tried to break out a couple times, failed. Here we had another little area formed, broke out one day, ended up closing below it and failed. Nvidia, big market darling, down to almost 50% almost. Holding up a little bit better. Twilio, making new lows. Five Below, Intuit, another big market darling. 716 down to 411. Qualcomm had an earnings pop, now it's giving up a lot of that. I mean, we can just go on and on. You can see that the bubble, some of these stocks, apps, I remember buying this when it was $5 and it went up to 93. I mean, this is all in the, in fact, let's go to the weekly real briefly. Yeah, you can see here it was a $3 stock, went up to 102, just these crazy moves. This was all just liquidity driven by the Fed. So let's go back. Now you can see here's some of the ones that just have completely given back the whole move. There's one, Fastly, Beyond Meat, there's Coinbase, HubSpot. I've actually used their products, a great company, but I never understood why this stock was almost going up to 1,000, starting to give up back a lot of that. Roblox, another big market darling, that's fallen apart. Coupa, giving back the whole move. PayPal, that's a huge company with good earnings and sales. You can see over here, it just gave back the whole move. So anyways, there's just a lot of that. So let me just go ahead and I'll pause for a second again. I'll come back. We'll go over some of the ones on our current list. Okay, so we're back. We're going to take a look now at the stocks on our watch list. We don't have anything on the ready list. Everything fell off. But this first one is PDC Energy, ticker PDCE. Now, if you notice, if you look back at the charts we just looked at, these charts look completely different. We're making new all-time highs in these stocks. So these are the ones we want to get. Now, last week they all pulled back. They're starting to all look a little toppy here. This one has earnings in 5 days, so we're going to hold off. But our buy is right above here. We have a little ascending base, which is a rare base. It tried to break out a couple times right from this area. Wasn't able to do it. One that looks actually really good is Jackson Financial. This is a more recent IPO, but unlike most IPOs, this one's actually in an uptrend, and it's formed a little double bottom here. You can see this V, and now it's kind of tightening up, which is, we always love to see this. See, big move here. We went from here to here, then we went from here to here, then this move came back up, couldn't break out, but you can see this is a smaller move, and then we're getting even a smaller move. At the same time, we're getting support at this 50-day moving average. You can see here, this was just that when it first broke out, the green line is the 21-day, and it was able to stay above the 21-day until it had its first big correction, and then it kind of tightened up. Now we're getting, the institutions and people are coming in. Let's see if we can see if any institutional. No, there's no fund ownership yet, because they're starting to get some, but none of the best funds. So we have. Actually, we have a declining number of funds. That's maybe not a great sign, but yeah. So they're in retirement planning, annuity products. So, but anyways, it's in the middle of a correction. In fact, here you can see the S&P is this black line. Look how it's kind of heading lower, and this is not. That's why it has an RS of 97, because it's outperforming most of the stocks in the market. So that one looks actually really good. So we're keeping an eye on that. The next one is Switch, which is one of the rare tech companies. They develop and operate data centers. And again, think back to those stocks like Fastly, Coinbase, and Roblox, which are down 50, 60, 70%. And this one's just right off its all-time high. In fact, let's take a look at a weekly. Let's see if we can get a monthly too. Yeah, so monthly, look at this. We're almost at an all-time highs. It's just a more recent IPO. So this could have a long way to go. So again, it kind of broke out here. That was one initial thing. It had a nice move, but it looks like it's going to form another base up here. So we're going to continue to watch that. The next one is General Dynamics. They're in the aerospace defense. Now, there were a few of these stocks that came up. Raytheon was one of them we were on our list, but that one performed a lot worse and it plunged. This one, you can see here, nice tight trading, broke out, came back down, and just been kind of tight trading here, but it's starting to drift down, getting support right at its 50-day, which is the red line. Earnings were okay. No growth in sales. Margins came down a little bit. That's what it is. But it's performing better than most stocks. We have RS of 93. And then the last one is Procter and Gamble. This is more a defensive name. And but one thing I want to point out, look at this RS line. It just went shooting into new highs. So you can see that's just telling you that money's flowing to these sort of defensive names. They make cleaning products and diapers and tissues. And this kind of a little too volatile. We did form a little cup with handle. There's the handle. We had a nice shake out of the handle, which we like. Also, notice how the handle's kind of heading down slightly, which is a good sign. It means we're just kind of getting rid of weak hands. What happens too is like the stock goes up, so you have people that bought over here. Now they're starting to take some profits. Then the market goes down. Now these people now are either breaking even, so they're either getting out here because they didn't make any money, or they're hanging in there and they wish because they think it's going to come back. Then when it actually comes back, then they think, well, now I got my money back. I'm going to get out because I bought it over here. So that shakes out these people. And eventually, you can see here, this area here is where all the sellers are lurking. We just can't really get above this area. So now we're back there again. We just came below the buy area. That's why we're back on the watch list. But this is holding up there. Amazing though, too, this stock actually has made a pretty decent move for one of these stocks, but it's not the greatest trader. I mean, it chops around quite a bit. And we do have an RS blue dot here, which means that shows that the RS is making a new high before the stock is. So that's a very bullish sign. And finally, we just have one other company we added recently, Excel Service. This was actually doing pretty well. It was holding up very, very well. And it had a bad day on Friday on high volume. We're still above the 50 days, so we're leaving it on the list. And this is on the long-term outperformer list. Let's take a look at it for the monthly. Yeah, so this is the kind of chart that we like to see. Even though, of course, you have some pretty big declines. This was in the coronavirus crash. We had another, in 2018, there was another sort of scare in the market. But overall, it has a nice uptrending move to it. And the RS is coming out to new highs. So this is a company that is really performing well in the long term. Pretty good EPS growth rate. That's earnings per share growth rate. Return on equity is 23%, which is good. Anything over 17%. And here you can see the earnings just slowly but surely increasing from $2.03 in 2015. We stayed in the twos, then did the threes, fours, fives. Now we're projected to be in the sixes. So this is just one of these nice slow growers that just continually makes money. Earnings and sales are pretty good. Of course, in the 2020, the earnings went minus, and the earnings and the sales went minus, and the earnings went briefly minus, but they've rebounded. So this is a company we're going to watch for a nice buy spot when the market turns around. So that's about it for this week. I hope this is helpful. And at this point, you should just be out, and we're just watching what happens, and we'll be back in the market when the saying goes, the money is lying in the corner, and we just have to go and pick it up. Right now, there's no money lying in the corner. And in fact, our wallet's open, and the pickpockets are are taking it out slowly but surely if you're in the market. So we avoid that. So, all right, we'll talk to you next week. Thanks.